Today is Tuesday, September the 24th, and we saw the market open up a little bit. We saw it in the after hours last night. When I went to bed, the market was up about 11, and I think when I first looked at it this morning, about 8 o'clock in the morning, I think it was up about 9. But look at the volume in the Dow, quite strong in the NASDAQ and the S&P 500. Pretty good volumes compared to what we've seen in the past, except for last Friday, which I think was still a warning shot. So the market was up for the first 15 minutes. That's when the institutions are doing their buys. They've placed orders to just buy at the market price at the open on money that they've got from the day before. That's why I don't trade in the first 15 minutes. And then the sellers came in, and they continued to sell throughout the day. And there was this little pop at about 2:15 in all three markets. I don't know what it was. And then we resumed our movement down. The bad news is that the decliners led advancers by about 3-1. And it was mainly a red with utilities. That's where your safety play. That's where you've got the 3, 4, 5, and 6% dividends, because you can't get any money. You can't make any money just keeping your money in the bank. So dividend stocks. We're going to take a look at AT&T shortly, but that's going to take our market breadth down below zero. And we said with all this congestion here that the only place for this to go was for momentum to turn and test at the neutral spot, which it did for a couple of days, and now it's made a firm decision to go below zero, and I suspect that it's going to go back to this area of congestion again. Now, whether we see this, that could be spurred on by talk of impeachment, but also the Dow did fall after the president criticized China in a United Nations speech. So with the Chinese supposedly coming over to Washington to engage in some talks, you go and insult the people that are coming over. Whether they're genuine or not, they're still coming over. You don't insult them on the way over. Peter Schiff, whom I really don't like and has been so wrong on gold over the last 10 years, still sees the price of gold going up. But there was a very convincing article that came out in Market Watch that showed that probably gold miners have been overbought. So I decided that I would look at a chart. First of all, let's look at the SPX, which is down 25 points today. Chiku Span doesn't tell us anything, but we did say that we were going to come down and we were going to test the gap. Said that back on September the 16th. And today we came and we tested the gap perfectly, and I tweeted it, that at some point in the day we pierced the gap, but we didn't go down to where the 50s, simple moving average, and the EMA are converging. So that's going to be a draw, and it's also the middle of the gap. So tomorrow could very well find support on the 50 EMAs that are converging here, but I really believe what I've said all along is that the market is going to go down. So it's going to go down. I said it was going to go down, but I'm going to say even more emphatically now, it's going down to test the bottom of the gap and possibly the flat cloud. So that would be points of 29.39 and 29.26. And at 29.39 right here, we see that point as having been reliable resistance here, 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 and here. So there has been selling going on at that point before. Now, will there be buying next time we see it? It was selling back here in June, and then we broke it temporarily. Let's look at that point back here in April and May. That pretty much was resistance. So the top of the gap has been an important point for resistance earlier on in the year and earlier on in the midsummer. So let's assume that we are going down to 29.40, and then I think we're going down to 29.24. But let's look at the correlation of SPY with get rid of all of my, don't tell me I lost all of my charts. All of my, I've done some really nice correlations, and I'm going to be a little ticked off if they're not here. That is, oh, sorry. Let's go into GDX. There they are. So GDX tracking against the SPY. Let's go back to the beginning of 2017, where we saw the market start. Let's go back even further. Well, let's not. We saw the market in 2017 move up. We saw gold, this shaded area here, move only slightly. And then gold had a very large drop. The market had a drop. Maybe the gold miners signaled some weakness coming in the market, because right here we had the gold miners going up and the market going up, and then they both came down. Then gold sort of stabilized, but the market moved up even higher. At this point here, the gold miners decided that they would make a reversal, and the gold miners started to move up, possibly telling us that the market was overbought and was going to come down, and it did. Then the market started to move up again. Let's try to bring those into play. Then the market started to move up again to reach a new high, and the gold miners continued to be favorable. And then people sold gold and jumped into a booming market. But then what happens on the green line here? Gold makes a turnaround just after the market starts to move down. Now my correlations are a little messed up here. My arrows are a little messed up, possibly because of this one. Take that out. Okay, now things come into focus a little bit more. So gold back here in May, middle of May, starts to make its move up. S&P is down, up, down. Gold continues to be a stabilizing factor. The market continues, gold market comes down, market goes back up, gold loses a bit of its luster, but now is it telling us again that people are moving into gold because they see the market coming down? Possible. I think it's an interesting set of correlations. So I'm going to be looking for any pullback in gold as a warning sign. Volume has been pretty good. We've had 4 days in a row of positive volume. We had a lot of selling going on here. We could put on a market volume analysis and look how much market buying and selling went on, but I'm going to say I'm going to hold my gold position, but I may start cutting back if I see any weakness in gold. Even if there's weakness in the market and weakness in gold, that's what I'm going to be looking for. And people saying, well, maybe gold is a little bit overdone. Peter Schiff is wrong so often that if he says that gold is going up, that would make me nervous. AT&T pulled down but did get support on the 8 EMA. I still want it to come down so I can buy it at a cheaper point than I sold it at, and I can buy it with a bit of a higher dividend yield. Whirlpool, we said it's going down. It's on a track going down. If you look at this little channel here, you could say that this is a bull flag. And we've looked at bull flags before. And is Whirlpool in a bull flag here? I don't know. But here's your pennant. And here's your flag. So let's keep a lookout for it. But at a weak market and having been rejected at this previous high, if it moves up, it's going to get rejection again at 152.50. Then it's going to come back down again. So I'm not jumping into Whirlpool yet. Remember, I sold everything last week in Whirlpool. Just as a reminder, I only have Caterpillar, less than half a position. And of course, that got snookered today. Look at that. Getting support on the, getting support on the 50, but losing the cloud. I think Caterpillar is a stock to watch in the future, but I did see something that said that it's going to take a better, stronger economy in China for Caterpillar to pick up. I wonder what the correlation is with Caterpillar in China, because there's so many good Korean manufacturers of heavy equipment. Remember yesterday we saw the Chikuspan provide resistance on the 50. We said we would watch it. Well, it was pretty tough resistance. Look for Caterpillar to go lower. Am I going to sell calls? I could, but they wouldn't be worth very much right now. And I've only got 400 shares. My losses in Caterpillar are almost being made up by my gains in my REIT stocks. AGNCM, preferred stock in particular, is doing remarkably well, and GDX. So overall, I only lost a little bit of money today, less than 0.1%. So I'm still glad to be in cash. Thank you.